Let's go live.
All right, we got to have that conversation again.
Do I have a time to change to flannel shirt as well? Or?
What? Good morning, guys. We just had the funniest, most useless conversation about flannel shirts. The boys were making fun of my flannel shirt. And then Terry's got his flannel, and Alex asked if he has time to go put his
cold
flannel
down here.
We had our first snowfall last night. That was fun. Oh man, that was us cutting up in last week's Wednesday YouTube live stream. So our designer worked hard on that today, and I wanted to put that in front of you. Speaking of, if you're looking for the Wednesday YouTube live stream on the Trading Analysis channel, we're not going to do it tomorrow. I am traveling tomorrow, going to Florida, and going to give the team some time off. Markets are in consolidation mode, and let me get you kind of updated on what we see here on the bigger picture here. So this is S&P 500 cash, and the big question on the table is this a trend wave up, and now we're in an ABC correction? And I'll kind of drill down here and give you more of a detailed look, but first, just looking at the bigger picture here, what do we know? One, we know that we've retraced your first Fibonacci retracement, which is 38% of the move from the COVID low up to the January high. So here's 38%, 786 is way down there, and your 618 is your typical, actually 2961. So we are at the most shallow fib retracement, which is 3556. And what's even cooler, I think, is we're very close to a 38% time retracement. So we had 38% time on September 11th. The actual low was a couple weeks later on the 9th, which that's okay. Actually, it's around the 13th, so about a month later, but in the same area. And we just got to figure out if the market is going to hold this low, which is the week of the 9th, bottomed on the 13th, and then begin to break up through resistance, right? So we have a couple things coming in that would offer overhead resistance. So number one, it's going to be this old high at 41.19, and then you have this downtrend channel sourced from the 2022 highs that will also intersect at that 41.20. So there's going to be a big potential breakout level there with a lot of buy stop losses going off up there. So off of the weekly, let's get down to the daily. And here you go. And I'll bring in one or maybe two smaller degrees of Elliott wave labels. So the way we have it labeled here is just a simple 5-wave diagonal in A, 3 waves in B, and then a smaller 5-wave move down. Again, the same degree. These green, this degree is the minor degree. So 5 down in C is of the same degree as this diagonal in A, right? So minor waves. And then here's the move up off the low. So we have a potential 1-2, small degree 1-2. The count could morph from here, but again, it's set up with a lot of bearishness, which is very typical in this market, to potentially begin moving up through 41.20. You've got 100% fib projection of that orange circle 1 compared to 3. So there's a ton of wood to chop. 41.20, downtrend channel comes in, that downtrend line extending down about there. 100% comes in at 41.94. So I'll call it 4100 to 4200 is a big breakout zone. Now, is it going to break out? I'm taking it very. I'm really trying to keep my mind open and let the market decide. There's heavy bearishness right now. We're starting to see kind of a reemergence of the macro forces, like in terms of interest rates, in terms of the U.S. dollar, in terms of commodities, that are starting to suggest that the market might want to push lower. This is my alternative count. Okay, I always have two scenarios going into a battle. You have Plan A. If Plan A doesn't work, you retreat, protect your butt. Try to minimize losses and go to Plan B. So speaking of Plan B, this is, I did a video on this last week. This is the triple Lindy of corrections. This is the Rodney Dangerfield triple Lindy. That's the jump he did in Back to School, which is a very complex wave count, which is basically an ABC, which is labeled as W, connected to via X, another ABC, there's Y. X waves your connector, followed by possible another A, B, C. And what's interesting and challenging and fun about this is if you look at the depth of each of the ABC corrections, right? If you do, let me get my square. If you look at the first ABC, whatever that is, 4,900 down to 4,100, 800 S&P points. Look at the next ABC from 4,600 down to 3,600, 1,000 S&P points. And then look how this next A, B, C is setting up. We have A, we have B. C wave should rhyme with the percent distance traveled in A. So you're talking 4,300, which could be that. You have an expanding volatility corrective pattern here, right? So each one's getting deeper. Volatility's increasing. This is something that I've talked about for about 4 or 5 years now. 2016, 17 were some of the lowest realized ranges in the Dow in over 100 years. We're getting volatility reversion to the mean, and this is not surprising. So if we look at inside of this guy a little bit here, this next A, B, C, we're at a 61% relationship. This is a retracement of the August to the October move down. 61% in price is at $39.85. You have the 61% in time, which was November 17th. So you've got a really good price and time right here that could set off another decline. I'm not ruling anything out. Really am not. If we start to break, and there's going to be a lot of stuff as I get down to the smaller time frame, don't be intimidated here. This is really what we're saving for the members. But the move from the October 13th low is pretty corrective. It's starting to make me think we might want to take a run at the lows. And if we get down here in the 60-minute, this is what's interesting. As we've come up and failed at that November high, basically what we've done is we've gone sideways from November, pretty much 11th. We gapped down. Actually, I had a short on with our clients for this. Covered it right about here, and then we've fallen into another consolidation. So it's really been sideways in this potential B wave top. It's kind of ranged out between 4026 and 3,900. So 120 point S&P range since November 10th. Today's now the 21st. So we've been sideways for a while. And again, we're just contemplating the future if this B wave is in fact the high and we're going to go down and do another more significant correction. I have positions to take advantage. I'm long. I have hedges on. I have cash on the sidelines, and I have a short list ready to attack if we do head down, and also we have a game plan if we want to go long. Guys, we could go either way. All right, so from there, let's take a look at some intermarket stuff. This is, I think, very important. This is going to be value to growth. Okay, this is iShares value to growth ratio. This is going back all the way to 2007, and you can see based on this chart, this arithmetic ratio of value to growth. Come on over here. You can do it, Optima. Growth to value right there. We have uptrend support that's coming in at about 0.38. Okay, and you can see that as growth has been outperforming value, that's kind of coincided with how the S&P has moved higher. So as the S&P is contemplating a wave 2 correction, as I showed you in the first wave count, you have growth to value pulling back into uptrend support. Consumer discretionary into consumer staples, same deal. Okay, now this is getting interesting here. All the way back to 2008, consumer discretionary has been outperforming staples since the credit crisis lows. We're right at support. Okay, consumer discretionary selling off relative to consumer staples. As the S&P is selling off, we're right at uptrend support. So we're at a pretty critical juncture here. So I think it's not a bad thing to say don't know exactly what's going to happen. Let's go to crypto. And I have a short on in Coinbase. I want to talk about that quickly. Alex, my main guy, he is tracking a very key level here in Bitcoin. Bitcoin is deep into wave 4 support, trading about 15,800. Wave count and validation would be the old high here from June 2019 at 13,826. If you break below that, that could be problematic. And what's interesting is Bitcoin has a pretty good relationship to the stock market. And I just thought of a chart that I just wanted to show you. Let me see if I can pull it up real quick. I have it. Where'd she go? Growth value. Sorry. So give me 10 more seconds. Here it is. Okay. So we look at the correlation to Bitcoin to NASDAQ. So we have Bitcoin is in the teal, NASDAQ's in purple, and you can see through most of this year, 2022, we've had a correlation that is above 0.6, 0.7 area. We've dropped down to 0.25, still positive correlation. Not as strong as it's been, but of course, anything 1 is a perfect correlation. So, we've been around 0.6, 0.7, 0.8 for most of the year. Okay, and looking at the coin short, let's look at Coinbase, which is obviously, taking a lot of heat with, they have money on deposit with FTX. It's nothing significant, but there's a big risk of contagion here. And being that Bitcoin is so correlated to the stock market, Bitcoin is clearly correlated to Coinbase. I mean, you look at that. Coinbase has made a significant new low as Bitcoin is trying to hold above that wave count validation. But going back all the way to mid 2021, you can see, the correlation is unmistakable, right? So I do have a short on in Coinbase with clients, and I do want to take you through that one quickly. Here's the wave count. Coinbase IPO'd back in early 21. I was on CNBC the day it IPO'd. A lot of people were bullish. I said, nah, don't touch it. I'm not touching it at all. I've seen this movie before when I was trading FX. There was in the early days, a lot of sort of, kind of fraud in the industry and some weird stuff. The model of being, a broker, either in Forex or in crypto, not disparaging Bitcoin or crypto at all, just the business model of transacting, on an exchange or something. That's a hard business. So what's happened is the market sold off quickly. And the way I'm counting this is a little bit more advanced. There's a lot going on here, but basically it's down in W for a complex. We just did ABC up in coin. And now I think we're doing another A, B, and now we're in the C wave, which is taking us through uptrend support. So I'm looking at wave 1 of C, 2 of C, and we're looking to get down to 3 of C. So I really think we're trying to position, with our customers to get down to 33, which is 100% green 1 versus 3 relationship, and even potentially the 1.618 at $23. So the trade that I have on right now is this guy right here out in the December 23rd puts, long the 40 put, short the 40, long 40, short 30, just have a 5 on. And if we get a little bit more confirmation, I'm going to look to put the other 5 on. This is the P&L here. Max potential loss of 1,390. Max potential gain sub 30 on December 31st at 3,600. And again, with a little bit more confirmation. Bitcoin lower. A little bit more clarity on the index, specifically that B wave move up in the S&P. Bitcoin through 13. Might add that other part and go to work on the short side with some other markets. But it's a very hit and miss. Market's quiet right here. I don't know if there's a clear takeaway. So let's see what happens this week and trade accordingly. Hope that helps, guys. Have a great Thanksgiving week. And those of you in the U.S. and celebrating, and look forward to working with you guys here after the holiday. Take care.